So, guys, at the mind blowing age of 94, Warren Buffett, the CEO of Berkshire Hathaway, is apparently still buying brand new stocks for their portfolio, this time in a very interesting play here on the ALK and CAN markets with a company called Constellation Brands, ticker symbol STZ. Now, just so you know, unfortunately, I do have to say things like ALK or CAN so that I don't get demonetized here on YouTube. But I know that you guys are smart enough to know what I'm referring to. I just want to apologize for the inconvenience of that all. But yeah, let's go ahead and take a closer look at this pickup here by Buffett. Constellation, like I said, it's a very interesting company. It's actually one that I got very close to buying the stock myself a few years ago, but I ended up never pulling the trigger on it. And I'm kind of happy I didn't because the stock ended up crashing later on. So it's just making it even more interesting. I'm actually very curious to do this update here, take a look at everything that's been going on with the company, what has happened since. I want to take a look at the business, the stock, and of course, I'll let you know if I would consider buying the stock right now myself too, now that it has fallen by a lot. And we know that the great Warren Buffett is a big investor in the company too. So it's very interesting. Now, let's go ahead and take a closer look. So I actually first saw this pop up here among Buffett's largest purchases last quarter, the most recent information available to us from the SEC. And there are actually other stocks that he's been buying too, like Domino's, Pool Corp, SiriusXM, Occidental, as well, rounding out the five largest purchases. However, all of those were increases to already existing positions, whereas Constellation was a brand new pickup, which at first glance, it might not seem like a huge amount there since it only makes up less than a half of 1% of the entire portfolio. However, because Berkshire is so insanely large, that was actually a purchase of more than $1.2 billion, which is actually, pretty gigantic. Most conglomerates or even hedge funds may slowly increase a position over time, but for any of them to just drop like over $1 billion in a single quarter like that on just one stock, yeah, that's a very bullish move there. In fact, two other stocks on the list, Domino's and Pool Corp, were brand new additions the quarter before, and yet in the span of the last two quarters, neither one of them is even worth more than $1 billion yet. And even if you combine the two stocks, they still are not even worth as much as Constellation already is for Buffett. So again, it was actually a very large purchase in the stock and a very kind of bullish signal on it too. Now, here's where things get really interesting though, because if you look at the average buy price section on this page here, well, you can see that the average price during that time was almost $240, meaning that the stock has actually crashed by over 30% since Buffett was buying it. Now, we don't know exactly how accurate that is because all the actual buy prices don't have to be disclosed to the SEC. So this is just like an average estimate from around that time. But with that big of a discrepancy there, we know that Buffett very likely went into this new year being heavily down on this position so far, which if he sticks to his motto of, being greedy when others are fearful and how he always preaches to buy stocks when they're low or when they're going down, well, then he should actually be buying even more of the stock this year. And that actually makes this a stock here that is even more interesting to look at now for that reason. Now, when we look at the charts here, well, we can see that big fall in price very clearly at the end of this 10-year chart here. It was a giant crash of close to 40% from the top, most of which again has happened after Buffett initially bought in, because if we switch over to a year-to-date view, well, we can see that so far it's lost almost a quarter of its entire value in just these first couple months alone. Big drop there. So look, now that we know about the purchase from Buffett and we know that the stock price has actually fallen by even more since then, well, let's take a look at the business now to see if this is a stock that is worth picking up for our own portfolios too, given the drop, and we got to consider the business performance. So let's take a look at it. Well, if you've never heard of this company, they are mostly an ALK company that either owns or holds marketing and distribution rights for some of the most popular brands out there, including Corona, Modelo, Pacifico, and more, particularly in North America, because I think Anheuser-Busch owns some of those rights overseas. But on top of just beers, they also market other drinks like wines and spirits, while also owning a large stake in the can producer Canopy Growth. Now, with Canopy, it gets a little tricky because they originally spent $4 billion investing in that company, where they then partnered on can infused drinks, which was something that kind of everyone thought would be a huge success, and even me too. I thought that that would be a high growth market and something that looking forward into now, like in 2025, I thought we'd see can infused drinks everywhere, but that hasn't really been the case. And overall, the can market itself got a bit oversaturated with so many players too, that many can stocks actually ended up crashing into the ground. In fact, Canopy Growth themselves have now lost just about all of their value from the top, dropping from a high of over $400 a share during the pandemic to now only being worth less than $2. I mean, man, what a crazy ride that the whole can market has been. It's pretty incredible. Anyway, because of these letdowns, well, Constellation ultimately decided to start distancing themselves from Canopy Growth by converting their shares, giving up board seats, and even voting rights too. Now, I believe that they do still own about a quarter of the company. Don't quote me on that. It's just something that I saw from doing some Google searches. It could be outdated, could be wrong. Plus, with all the distancing that they've been doing, I wouldn't be surprised if they've actually sold some of that stock since then too. But as it stands, it is something that perhaps they own around a quarter of Canopy Growth. I think that's the most reliable information we have. But primarily, this is going to be a company that just relies here on beer for the most part, and then to a smaller extent, some other drinks like wine, and then to an even smaller extent than that, a stake in Canopy Growth, some exposure to can, which may even become non-existent in the future if they continue to kind of distance themselves from that. But that's more so speculation. Anyway, the beer market alone is actually very lucrative for Constellation, especially given the downfall of Bud Light and all the controversies that they've faced in recent years, where Modelo has actually risen to now become the #1 most popular beer in America because of it. And that's a feat that they've actually never achieved before in history. Now, going forward, Anheuser-Busch and Molson Coors, they still have more overall market share in America. It's hard to find exact figures on this, but for example, I just pulled up some figures here. Constellation did around $10 billion in total sales over the past year, while Anheuser-Busch did over $15 billion just in North America alone. So, there is a discrepancy there, but overall, you're probably talking about like a triopoly happening in America consisting of AB, Coors, and Constellation, which again, the ALC market is very large. It's a very resilient one, sometimes even going up during economic downturns. And so that's resulted in pretty strong financials for Constellation over the years, with sales consistently growing every quarter, and even EPS profits expected to break new record highs in the next couple of years too. However, that growth is actually pretty small. You're typically looking at just around a mid-single digit growth rate at best for their sales. The reason for that is because there's not really anything new or fresh to look forward to. In fact, one of the main reasons why I actually considered, buying the stock several years back was because of their future growth potential in the can market. Because with that, you would have essentially a very large and well-established dominant business in the ALC market, but with also the future growth potential, the speculation kind of part of it in the can market too. But unfortunately, that hasn't really panned out. And so now you're mostly just left with that reliable, but relatively stagnant, ALC business that Constellation has. And yet Warren Buffett seems to think that it's still a great stock to own. And here's why. It's the combination of really that reliable business coupled with a dividend that is yielding about 2.4% with an excellent payout ratio of less than 30%, meaning it's very safe to collect long term. And you also get a dirt cheap valuation at a forward PE and PEG ratio that are over 20% and 30% cheaper than the sector respectively, despite this being a leader in a very resilient market. And so that total package as a whole is actually very attractive. And that's, something that Warren Buffett typically looks for himself in most of his stocks, right? They tend to be kind of boring, low growth companies, but deep value. He always a lot of times he wants a dividend. A lot of times he just wants that low valuation, a falling stock price, things like that, some turnaround potential. So, and again, all of that together as a package, it is actually very attractive because of the stable financials and business that they have. However, You might be wondering, well, why then has the stock actually gone down to that dirt cheap valuation? I mean, it doesn't seem like the business is struggling enough to warrant that. Well, I can tell you with pretty good certainty that it's a combination of three things that really drag this stock down. Number one, the can investments just not panning out well for them, kind of hurting their growth potential in the future. And Wall Street always wants to see that future potential, right? Number two, a recent earnings report didn't really impress Wall Street. They missed on some analyst estimates, and then they also gave lower guidance than Wall Street wanted to see. And number three, much of the poor performance, including that weaker guidance, is really stemming from both inflation and the threat of new tariffs, the ones being essentially threatened by the new president, Trump. Now, when looking at those tariffs, for example, it actually correlates almost perfectly with the recent crash in the stock price. Trump won the election around the end of last year. Well, it's almost entirely when the stock price really started to crash, and it's been falling ever since. And a big reason why is because Trump was threatening tariffs of as much as 25% on Mexican imports. Now, why does that matter? Well, most of Constellation's brands are actually made in Mexico, like Corona and Modelo, and then they're imported into the United States. So imagine with all that crazy high inflation that we've already had, and on top of that, you add on another 25% to any Mexican beers coming in, well, you just know consumers would likely pull back from them and likely start buying some domestic beers to at least some degree, right? I mean, it's probably not going to kill them. Modelo and Corona are very strong brands. A lot of people are still going to buy them, but it would have a major impact. In fact, the CEO himself talked about inflation in their latest earnings report, saying that they're already seeing clear evidence from consumers and signs that they're choosing cheaper options whenever possible because of inflation. So, you tack on another 25%, yeah, that would be very harmful. And that's why we're seeing the stock crash accordingly. Having said that, though, after Trump threatened Mexico with those tariffs, their president spoke to Trump and agreed to secure the Mexican border, for which Trump delayed the tariffs for another month. And to my knowledge, the most recent information I have, nothing has really escalated since then. I think the most recent news on tariffs is that Trump wants to do reciprocal tariffs and is already looking to implement a 25% tariff on cars, pharmaceuticals, and chips. But obviously, none of that includes beer. So theoretically, Constellation should be fine, at least for now. And realistically, I don't think it's something that either side really wants in terms of the US and Mexico. So Buffett is likely betting here that there will be resolutions to come, with Mexico mostly giving in and agreeing to certain terms. But we'll have to wait and see how that plays out. It's mostly speculation of the future. Now, in the meantime, though, I just think Buffett looks at this stock as if it's a buy. It's fallen by even more, and I wouldn't be surprised if he continues to add to the position here. Obviously, in his 90s, there's unfortunately not going to be a whole lot for him to look forward to in terms of really long-term gains, but I suspect that this is much more of a long-term play, that he just kind of wants to put this into the Berkshire portfolio for their future success, kind of focusing on the company rather than his own personal gains. And he just kind of wants to leave more value behind. So I think maybe that's why he went with a stock like Constellation, because long term, I do actually think Constellation has a very strong business and the stock will probably rebound. I mean, I can't imagine that it would continue to fall by too much. I mean, it's already fallen quite a bit. By the way, Wall Street also agrees with him, as 19 analysts over the next year have targets much higher than where the stock sits today, with even the lowest estimate being a 10% rise, the average being a 45% rise, and the highest being almost an 80% rise. Now, as for me, it's very tempting to get in at these levels, especially as a value play on a long-term recovery here. If I was looking specifically for that, I would actually start buying right now. However, I already own several stocks like that, and I can't own every stock in the market. I'm a little more interested at the moment for some growth and some dividends, which Constellation is severely lacking in. Too low growth, too small of a dividend to really get me too excited. But if it keeps falling like this, I might not be able to resist much longer, and we'll probably have to start buying some shares because, like I said, it is looking pretty attractive at these levels. But hey, those are just my thoughts. I would love to hear what you all have to say down below in the comment section. Let me know your thoughts. Hope you enjoyed the video. Hope you enjoyed this quick update, and I will catch you in the next one, my friends. Take care, everybody. Bye-bye.